Bitcoin is a decentralized digital currency without a central bank or signal administrator that can be sent from user to user on the peer-to-peer Bitcoin network without the need for intermediate transactions are verified by the network nodes through cryptography and recorded in the public distributed ledger called a blockchain. The cryptocurrency was invented in 2008 by an unknown person or group of people using the name Satoshi Nakamoto. The currency began use in 2009 when its implementation was released on the open source software. Bitcoins are created as a reward for a process known as mining. They can be exchanged for other currencies, products, and services. Bitcoin has been criticized for its use in legal transactions or the large amount of electricity using by mining, price volatility, and theft. From exchange, some investors and economists have characterized it as a speculative bubble at various times. Others have used it as an investment, although several regulatory agencies have issued investor alert about Bitcoin. A few local and national governments are officially using Bitcoin in some capacity with one country. The word Bitcoin was defined in the white paper published on 31 October 2008. It is a compound of the word bit and coin. No uniform convention for Bitcoin specialized exists. Some sources use Bitcoin capitalized refer to the technology and network, and Bitcoin lowercase for the unit of amount. The unit of amount of the Bitcoin system in the Bitcoin currency calls for responding Bitcoin or it includes character in one Bitcoin is advisable to add decimal place unit for the smaller amount of Bitcoin and the stoichs which is the smallest possible division and named in the homage to Bitcoin carrier represented 100 million Bitcoin. The Bitcoin blockchain in the public ledger and records Bitcoin transaction. It is implemented as a chain of blocks. Each block contains a hash of the previous block up to the Genesis block. A network of communication nodes running Bitcoin software maintains the blockchain. Transaction of the form pair X sends Y Bitcoin to page Z or broadcast to this network using readily available software application. Network nodes can validate transactions, add them to their copy of the ledger, and then broadcast these ledger addition to the other nodes to achieve independent verification of the chain of ownership. Each network node stores its own copy of the blockchain of varying interval of the time. To every 10 minutes, a new group of accept transaction called a block is created, added to the chain, and quickly published to all nodes without requiring central oversight. This allows Bitcoin software to determine when a particular Bitcoin was spent, which is needed to prevent double spending. A conventional ledger record the transfer of actual bills or promises notes that exist apart from it, but blockchain is only place that Bitcoin can be set. to exist in the form of unspent output